This quarter has been phenomenal, the turnaround in equities. Are you bracing for yet further volatility?
Caroline, I am. I think that we're in a position where the U.S. economy is in a recession, even though GDP is not negative. Inflation is still running high. It's coming down from 9, but even right now, it's still in the 5-6 range, which is too hot. And I believe what Jay Powell said. He's going to hurt the economy in order to fight inflation.
We've never seen this, at least for most of us of a certain age, have really been alive to see this, Chris. There are a lot of folks out there in this market that were around during the Volcker era, where we also heard similar rhetoric. Obviously, the circumstances are a lot different, but the intent does appear to be the same. And Jay Powell himself has even cited Volcker on multiple occasions publicly that might be the playbook that he's following.
Romaine, I think you're spot on. And remember, Volcker, and yeah, I'm that old, as is my friend Bob Maynard, who is retiring today, 30 years as the CIO at the state of Idaho. He and I would tell you that Volcker was not nearly as clear as Jay Powell. You know, this is a new era where they have a dot plot. They're already telling us where they're heading. They're at a 3 1/4 now. We're going to get another 3/4 and then probably another half. So we're somewhere close to 4.5 at year end, and they're not going to stop there. Everybody talks about where is the resting heart rate of inflation. It's probably around 4 to 5%, and that's still too high for the Fed. They want it down to 2%. I just don't think we should lose sight of that. So the market's going to have false rallies, just like we experienced last week and a little bit. But the overall trend, I'm sad to say, is going to be lower. We're going to test lower lows.
How then do you think about what a scenario looks like to get us to peak yields when you think about the relationship between wanting to tackle inflation but also watching unemployment and making sure it doesn't blow out?
Well, Taylor, you know the Fed's 2 targets are inflation, full employment, and then fight inflation. And their tools don't hit either one of those. It's not like they have a dial where they can tweak it in and hit a number. But he said very clearly at Jackson Hole, repeated it again, he is willing to hurt full employment in order to get inflation down. And again, it's an indirect tool they have with interest rates. Inflation is just all over the place in all kinds of things. So as we learned with Volcker, and I learned in the 70s, it's really hard to get inflation down and keep it down. Remember in the 70s, in 1970, inflation jumped a little bit. Yeah. Then it died down and everybody got excited. But then inflation peaked again and we had the 73, 74 bear market.